Hey guys, and welcome back. So today is Wednesday, the 16th of March, the day before St. Patrick's Day, being in Dublin. Obviously, tomorrow is a bank holiday for Paddy's Day, and that's for any American viewers. It's Paddy's Day with two D's, not Patty's Day. So just remember that. Anyone wants to change my mind, come after me. Do that in the comments. Okay, but it is Paddy's Day, as in Padraig, as opposed to Patrick. Okay, just so you know. Anyway, the day before St. Patrick's Day, and we've had a good green day. I just want to do a bit of a summary recap of the trades that we've taken today, and why we took them, and where we finished. So we finished over 11,000 in the green. Our first trade of the day was KE Holdings, which was trading under BEKE, and this was the first part. Is if we look here. I can see that where the green arrows there is where we get in, and we can see here we've got a entry point at 1320. What we saw was in pre-market, the 1320 was acting very much as a resistance level, and then it came up and retapped this resistance level. So when it pulled back, I looked at this for a particular break of this level. So 1320 was where we looked to get in. And we got in. I think we got in at 1323, 1324, something like that. And I think our average buy price was about 1323. So what we did is we rolled that up. We actually took profits up here at 1340. We wanted to give it a 20-cent profit. That was our reward. We're going to risk 10 cents on the share. So if it had pulled back down to 13.10, we would have been out. But 13.10 was kind of the low of this pullback. So that was what we were looking at. So we rolled this up to 13.14. We took half of our position off. We took a little bit more profit off prior to the break of the $0.50, because we knew that psychologically that is going to show us a bit of a resistance level. So then as it broke, you can see the volume candle at the back, it broke it with significant volume. So we actually added back to our position 1355 or right up to 1370. We were going to look to take some profits at 1375. We didn't get there. So when it flushed back down, we actually took off what we'd added for a little over break even, so we're kind of a couple of cents profit on that side of things. So it covered the transaction. By this stage, our average buying price was at 1345, 1344. So when we got back down there, it pulled back. That's when we actually got stopped out. So that was our first trade. That took us to about 1,400 profit on the day. Then we moved across to AKAN, and we traded that. And I'll come to that in a second. But we came back to KE Holdings a little bit later at the bell. At the bell, we looked at entering as we just kind of jumped in quick, and we were looking for this break of 1320 that we were seeing. If I just scroll back here, after I traded this, it went up and came back, and it carried on using 1320 as a resistance level. It was a key psychological level, a key resistance level pre-market. So that's what I was looking for. It pulled down just before the open, and then at the open, it started to move up. So we entered again for the break of 1320. It actually moved all the way up here and then pulled back, but we kept holding. We didn't get out. We were again 10-cent risk, so it didn't pull all the way back to 1310. It just started to move back up again, and we took some profit here, a little over 1330. So what we did is we just wanted to get a bit of a cushion on the day. First couple of trades into the open, got a bit of a cushion, and so we took half of our position off, and then we added back here for the break of the $0.75 level, and then as that moved up, as it started to pull back, we decided, okay, we're going to take some profit there. So we took half of our position off there. We took 5,000 shares off, and we were left with the remaining shares here which were 5,000 shares. This was then our break-even point, and that was our stop. So we effectively got stopped. So it then continued to flush down, but that was okay. We were watching this. This was we moved away from this one from there, and we'd actually made a profit. Totally, we made over $4,000 on that one in those first couple of trades. Then we moved to AKAN. So AKAN was an IPO from yesterday, and it sold off most of the day yesterday. So it moved up a little bit. It started at kind of $30, moved up to 31, and then sold off, and it was trading below $10 towards the end of yesterday, and it started at a little over $10 today. And then at the open, we didn't see this straight away because it wasn't gapping up a huge amount at the open to start off with. There were so many gappers. It was such a busy day today. The whole Chinese stocks was gapping up. We had a lot. I think we had at one stage about a dozen different stocks that were up over 50% on the day. So we were not short of tickers to choose from. So AKAN started, and I caught this because it hit a halt level, and it halted on the way up here. So I thought, okay, let's have a look at this. There's a lot of volatility. There's a lot of volume. So as it pulled back, it gapped up slightly, and then it pulled back. It pulled back just beyond the volume weighted average price, and then it started to move up again, pulled back, and it moved up again. So I looked at this and I thought, okay, well, we've tapped the 1457 level, 1460 level a couple of times. What I want to do is when it breaks that level, I want to get in about 1460, 1470 is my entry point. However, it came up on this level and it went and it broke 15, but it did so with such volume. I was very slow to the trigger that I got in over $15. I wanted to see the break of $15, but I got in. It was over $15. We actually got filled. Our average fill was about I think 1523, I think it was 1524 or something, and it completed the fill up at 1540. So we were in the 1520s when it got filled. It continued to move up with volume, with volatility. It was quite with velocity is probably the best word I was looking for, and it moved up and it halted at 1572. Now we were in for 5,000 shares at this stage, I think it was. 5,000 shares we were in, and we're caught in this halt upwards. Now I'd seen this on the thing. It gapped up, and it started at 1614, and it moved up briefly, and then it started to pull back. So I exited half of the position here up at 1630, and then as it pulled back to the level, previous level that we were at, where it halted, 1572, that's when I decided to, okay, I'm going to pull the trigger and exit the rest. Okay, then it moved up again and started to pull back again. So it was very volatile at this stage. It moved up to kind of 1570s, and then when the next candle started to form, I was like, okay, next new high, that's what I'm going to enter. So we entered at 1573. And we rode this up all the way to over $19. Great trade, great trade. We took half of our position off up here at $19, and then as we came back, we'd adjusted our stop to our what is effectively the entry price there. So that's where we actually exited. So our stop price was here at 1775, 1780. And we exited the position. So that was another great one. Almost $8,000 on that trade we made, and add to that the over $4,000 that we made on KE Holdings. We were in the zone. We were trading really well. There was a lot of action on the day. We were trading really well. We've come off 2 red days, so we were feeling good about ourselves. Just to get a green day under the belt was really good. So then we decided, okay, we're going to move on to KE and that's KC. The KC is King's Cloth Cloud, and this was the one that was seeing the volatility and the volume at this stage. So we looked as it was breaking highs. We saw here it broke highs, and it broke highs on big volume. Pulled a little bit back, but the volume was still in. So it broke highs up here. So it had a pullback here, red candle, which I don't mind, a consolidation candle. So I was watching this for, you know, a reversal, if you will, and then a move back up. So a little bit of consolidation. I wanted the pullback because I couldn't get in here. There was no entry position for me here. So I wanted the pullback. So I thought, okay, next candle to make a new high. That's my mini bull flag, if you will, or is what I was looking for. So I got it. I entered here on this candle. As we made a new high, we broke the high of this candle, which was 544. So we took a position at 545. And it moved up to 547, faked us out. The volume didn't come in. We didn't get the follow through. So, you know, it then came back down again. And we were up here consolidating. We moved into the next candle. It decided that, okay, actually, we're not going to do that. We were up at 545 was our entry point. We decided, okay, we're only giving it a 10-cent risk. So 535, we just exited the position. It cost us $500, but we were already up quite a considerable amount. We're up on almost $12,000 at that stage. So it was worth the risk. If it had followed through, and you know, I'm still okay with that entry for the break of new highs and the move up, but we didn't get the follow through. So, you know, 3 trades today. We're finishing in the green, net profit and loss of 11,400, and it's good to get another green day under our belt. So tomorrow's a new day, St. Patrick's Day, and we'll be back trading again. We'll be trading an hour before market open, so that'll be 12:30 GMT. It will be 8:30 East Coast time. Feel free to join me if you do want to learn the strategies I use to consistently be profitable. I do have my red days as well. That's what happens. Trading in the markets is risky. So, but if you have got a good strategy, you can avoid those big red days and concentrate on the winning green days and be consistently profitable over a longer period of time. If you want to learn how, you know, click the link in the description. Don't forget to give me a thumbs up and subscribe to this channel for more day trading insight. Okay, thank you very much.